It's Welcome to the Resolution.
Hi Jay, we're here again for another episode of Welcome to the Resolution. My name's Stuart, I'm here with Jay. Today we're going to kind of do a kickback to one of our previous episodes, which was our entity episode, which was which entity to choose. I guess recently we've been looking at a number of clients coming in and learned a few lessons maybe about errors, maybe better choices people could have made with setting up entities, and we just wanted to extend the thoughts from that episode into a new one, just based on some common mistakes maybe, or the way in which you've set up your entity when you really knew before you knew what was going on, and then you suddenly realize you've got a tax burden and now you got to go back and wow, maybe what you set up wasn't quite right.
Right. Well, and to add on that, Washington Tax, we are experts in multiple year non-filers. That's who we've been servicing really most aggressively in the last 10 years of our nearly 35-year existence. And so we have a lot of lessons from multiple year non-filers that we want to share with you, the audience. And you can interact with us, of course, through our website, watax.com. But ultimately, with the exception of partnerships, which is becoming an entity you're not seeing as often, most businesses choose to be sole proprietors, S corporations, and C corporations, or LLCs that elect to be S corps or are sole proprietors, not being multi-member LLCs or partnerships. Multi-member LLCs can choose to be S corps, but really corporations, sole props are the way to go, particularly S corporations. And single-member LLC is probably the most popular entity status in America because it gives you that liability protection. It's easier to set up than a corporation. But what those LLCs should be doing, in my humble opinion, is to be S corps. So the question is, what are the pros and cons of all these? If you have a successful or a business that you want to be successful in, what is the right choice? And so we have some lessons from our experience in our multiple year non-filing client base.
So is it more based upon the size of the business or the type of the business, number of employees? What kinds of things should somebody look at when setting up or thinking about changing their entity?
Good question. So the truth of the matter is, being a corporation, which is also called a C corporation, is really not a good entity choice for most businesses. C corporations pay a 22% flat income tax on their profits, and the owners, should they take dividends, also pay a tax on their income tax return for any dividends they take out. Not the most super attractive entity. S corps do not pay tax. All the money goes to your tax return on a K-1, and you are not taxed Social Security and Medicare on any dividends you take out. And you're not taxed on the corporate level. S corps are a pass-through vehicle. There is no corporate tax owed like a C corp. Sole proprietors fund their own Social Security and Medicare at a 15.35% rate on top of income taxes. An S corp is a lower tax model compared to that. But a C corp is much worse than a sole proprietorship.
And that's what we're seeing some startups going into.
Yeah. And so, at least with the sole proprietorship, you're getting the benefit of Social Security and Medicare funding.
Right.
With a C corp, you're paying the same tax rate probably when you count both the corporation and the dividends tax, but you're getting none of the benefits of a sole proprietor.
Yeah.
So you're better being neither. You're just being a sole prop, which is what you are if you set up the proverbial lemonade stand. You're a sole prop. But if you are a corporation and you choose that for whatever reasons that maybe an attorney might steer you into that, or an LLC, you really should make the S corp election if you are going to be a profitable business like $50,000 to $500,000. Pay less taxes on the Social Security and Medicare. And also, by virtue of being a corporation, you go on payroll and create that straitjacket so you have taxes withheld, which is always a problem for sole proprietors, like paying their estimated taxes. It's easier to get on payroll and not have to think about it. That is a unusual view. Sole prop better than C Corp.
What are some of the pitfalls that somebody should be wary of?
Well, as we said, we're multiple year filer people. WATAX, I think, invented the term the just kidding corporation. Mm-hmm. These are corporations that should never have been corporations. And so a lot of people that haven't filed in a long time, they may have created a corporation and didn't know what to do. So what we do, instead of filing the C Corp returns, we'll just say, stop operating this business, close the bank accounts, notify the state it's not operating, dissolve it, and we'll just file your tax returns as 1040 Schedule C sole proprietors. So that's often a remedy we have for the quote-unquote just kidding corps. On the other hand, if you were an S Corp and you haven't filed taxes in a long time, you probably should, because an S Corp is a very favorable tax status. So in many cases when we run to an S Corp, we recommend that they file the S Corp returns. But if you're a C Corp, forget it. We'll just do sole prop because it's not as tax advantageous as even being a sole prop. Another point on this topic that I thought I'd squeeze in is a lot of people think they're S Corps and they're not. You're not. If you're an S Corp, you have to make an S election by filing Form 2553.
It almost sometimes feels like people have looked up like they've started a business and they're like, yeah, I'm an S Corp, like in their own mind, but they haven't actually done those steps.
It's a language thing. Mm-hmm. I think somehow in the U.S. people have associated being a corp with being an S Corp, not realizing that 2 months to 15 days after you start your corporation or LLC, you need to file the S election to make it timely. You can file a late S Corp election by using the Form 2553 as well, up to 3 years after you start an entity. But the longer the time goes, the harder it is to get the late election relief. So ideally, you file it 2 months, 15 days, no later than 2 months, 15 days after you start the entity.
So I know that I've had at least one client recently say, I haven't filed for a while. I've got a company. Yeah, it's an S Corp, I'm pretty sure. But it's been 10 years. But I'm pretty sure I did that. Can they look that up? Will we look that up?
Very good question. So all of our LLC and corporate clients, we're going to look you up in the state database under, we'll say, California's corporation search. Yeah, sure. And just confirm what year and day the entity was formed. And we usually can distinguish that as a corporation or an LLC. But the S Corp election can't be ascertained unless we know the client filed an 1120S and has proof of it, or we take an IRS power of attorney for you and call the IRS and find out. We do S Corp elections for lots of people, so if you have a successful business out there and you want to be an S Corp and you just want an accountant in your corner to make sure you do all the right things, that's the kind of client we love. And we'll file your S Corp election, kind of babysit your entity for you. If you are certain you're an S Corp, we can at least verify that. But back to your hypothetical, which is, what if you haven't filed S Corp returns for 10 years? I mean, ideally we'd file all 10, but we're not. We'll probably just file 6 years. And just
that's the kind of typical compliance window is fairly safe most
only
cases.
If even if you're filing the returns 20 years ago, it would be nice to have the depreciation schedule and have it go continuously through all the years. But even if you filed 15 years ago but quit filing 10 years ago, we'd probably go with 6 years.
So just as far as somebody who's unfiled business, what are we going to be asking of them to provide for us if we're going to do them as the just kidding or as a sole prop?
Very good question. So here's how we onboard each case. If you truly are a C corporation, and that's what you want to be, C corporation is the business model for companies that want to grow and become very big and maybe even publicly traded. Apparently, C Corps is the best entity to like sell your shares or to like be bought out.
Sure.
And that you'll have to consult a lawyer on that. But nonetheless, if you're a C Corp, we're going to need your profit and loss statement and your end of year balance sheet and your last corporate return. And if you haven't done the books, we have a bookkeeping available to you. And then S Corp will need your last 1120S, profit and loss statement, end of year balance sheet. Unless you're below 250,000 revenues, we don't need the end of the year balance sheet. And lastly, sole prop, all we need is a P&L. And the 1040 from last year is helpful.
Yeah, so I think we got a few more minutes here, but our number is 888-282-4697, and our website is www.watax.com. On that website, we've got a lot of blog entries, a lot of further information. Again, that previous podcast that we had about setting up an entity to begin with, all that kind of information is contained there. Are we anything else we want to touch base on here? I know we kind of have, like I said, a few more minutes or a couple more points.
No. Bottom line is be careful when you start an entity. I think setting up an entity as an LLC is the most cost-effective thing compared to a corporation. And the beauty about LLCs is you can elect to be an S Corp. The best way to avoid an audit is for you to file your taxes. So if you haven't filed in 4 years, start filing, lower your audit risk, and then file and pay your taxes after that. So that's just my tip for the day.
Building on that a little bit, do any of these entities have more of a visibility to the IRS or more of a concern? Is that another piece that might come into play for an individual?
The two most common audit red flags in our experience is to be somebody that doesn't file their taxes and have the IRS start filing for you, creating their own returns. And number two, reporting massive losses. And I'll even add a third, just based on some recent audits I've done. People that run a business but don't pay the owner wages. People want to know to use a French expression, raison d'etre, the reason for being for a company, and that is that the owner actually is profiting from his time spent on the business. And like if you're in a corporation or an S corporation, putting yourself on payroll reduces that audit exposure.
And that's usually our recommend for clarity, right? Is getting on the payroll yourself.
If you're a corporation or an S corp, and you're actually expected to be on payroll if you're an officer. But it is a red flag when they don't see it. Writing off huge losses on your 1040 has got to be the biggest red flag out there. I mean, that is asking for an audit. Close to first is not filing your returns.
Just in general.
Yes, yes. And we understand the paralysis. I mean, time goes by, your books are crap. I mean, maybe you
or you don't even have any books because you don't even know where to start.
Right. Yeah. And you're like, the procrastination gets worse and worse. And we can totally relate as people. We all have our issues in other areas of life.
Well, there's always a way to untangle as well. I mean, that's a lot of what Washington Tax seems to do for people is we try and look at any given case and say, well, this is what you have. This is what we can work with. Often I'm sure you've said it on this podcast, perfection is the enemy of the good. And
yes.
I think that kind of comes into play
That's
a lot.
Our motto.
Yeah, it comes into play a lot in these kind of instances where somebody's so handcuffed by the past, wanting to do everything to perfection that they don't do anything, and that gets in the way of just getting in there and doing what you got to do.
We are log jam removers. we're the feng shui people in your tax return organization life. We're very rigorous at clearing log jams.
Clearing log jams, putting up mirrors in the right places, and letting the chief know.
And doing it ethically, and making the best judgment call on decisions that require judgment calls, because information in the past is harder to acquire than recent information. And sometimes we have to make judgment calls about that information. I've got a client right now that sold a $3 million property in 2018. And we're just trying to figure out all the mechanics of that transaction. And with the time that has passed, we have to commit to some numbers ethically, honestly. And it's just not as easy as if the property sold last year.
Sure.
Nonetheless, WATAX.com and 888-282-4697. I'm Jay, licensed tax professional. Thanks for our, 8th or 9th podcast.
Yeah, good to talk again, Jay. Lessons learned
from the School of Life.
Lessons learned from the School of Life.
Yeah.
Thanks, Jay.
I'll see you later. Thank you.